Hello traders, Offensive from FX Link. Welcome back to another episode of our Forex market weekend preview. So as usual, we'll be taking a look on two of the pairs that my partner and I sent out analysis on this past Sunday. And we'll be showing you if we did hit take profits, how exactly do we manage to enter those trades. So without wasting any further time, we'll start off with the EURUSD and then follow up with the Aussie dollar. So let's get straight to it. If you have a selling opportunity at ready to see that the stop loss, your risk will be close to 100 pips, as this is our highest time. You can see a stop loss would be at 110 risk. So I'd have to wait for price action to give me a push up somewhere close to my 1618. And if I do get further confirmation, this is where you can see that now this reduces my risk to approximately 60 pips. So this won't be too bad. And my take profit, at our first take profit, this is where we had a 127. You can see for a risk of 52 pips, you can get a reward of a 157. This is more than a 1 to 3 type of trade. So for other traders, you can be looking to take, for the more consecutive traders, as soon as you'll be looking to take profit back at the test of structure. So for those who did manage to join us this past Sunday on our preview on the EURUSD, you remember that we were looking for a possible short-term opportunity, and we were looking at two major levels. First up, we were looking at it at 82, where we anticipated the price action might be able to give us a push somewhere close to at 82 level. Pardon me, I'm sorry, at this 2. Where this was at 82, and the second level we were looking at was our 1618, which is somewhere at this level. Now these were the two levels that we were particularly focused on, and we mentioned that as soon as price action starts giving us a rally up somewhere close to these levels, again, we won't just be just ready to put pending orders, but we'll be waiting for certain confirmations. Where I mentioned that we were looking for at least to get a bearish divergence or a double top. And if ever we do get two of these confirmations, whenever price action does approach either our 82 or 1618, this is where we'll know precisely where to sell. So as soon as the market's open, you can see that price action starting to give us a rally up. And we gap a bit of a gap to the bullish side. And then price action started to give us a really up. So immediately, as soon as price action started to touch our 82, this is where we had to become more observant, looking for the certain confirmations that I mentioned, either a bearish divergence. So this is where price action started to hit our 82, and as you can see, price action really down at this point. Now at this point, because we didn't enter this part, we were waiting for certain confirmation. One would have been panicking, because when you say, if ever I did put a pending order, I would have been in profit by now. But the more focused trader who follows his rules would know that even though price action did really down and might have hit the take profit, because that it didn't fulfill the certain requirements, you weren't going to take the trade. This is one of the things that tests your discipline as a trader, to see if you panic with the market and have something called FOMO, a fear of missing out, or do you stay disciplined and wait for a certain criteria on a trading plan to occur before taking the trade. And as you can see, I would have personally left this trade because I didn't get either of those confirmations. And right at this point over here, if I could try to zoom in, okay, let me try to remove this so you can see, make it more visible. So now as you can see right here at 82, now we just got a double top. Now double top was one of the first confirmations we were looking for, and after double top, you can see, if you take a closer look, we also got a bearish divergence. So this was the perfect place for one to enter the trade. Now if you remember on a Sunday preparation, I specifically mentioned that I won't be taking the trade on a 382. Why was that? Because I mentioned that if ever I had to take my trade at 82, my stop loss would still have to be above this previous high, and an entry at 382 and a stop loss just above this previous high would have widened my risk for more than 100 pips. And I specifically mentioned that my risk management wouldn't allow me to take the trade at 382. So even if I do get those certain confirmations at 382, I'd still have to miss the trade or wait for the trade to give me a push somewhere up to our 1618. So at this point, if you're watching our market preview and your stop loss would have allowed you to take this trade, this is where you would have an entry point, and it would have looked something like this. If you try to lower this down, this way you would have an entry point, stop loss and summation would have to be above this previous high, and take profit would have to be right here at our 127 extension. So what happened after that? You can see that price action started giving us a really down. But what happened immediately at this point, although at 382 you wouldn't have been stopped out. Let me try to put this, try to bring it aside. So if ever you had entered at 382, you see that price action is rolling up to our 1618. Now specifically for this is a level I was more interested in, because hence I mentioned again, my risk management didn't allow me to take the trade at 382. So immediately when the market hits our 1618, this is where I'll start looking again for those two confirmations, which is the double top and the bearish divergence. And as you can see, price action just breaks above our 1618. And right here at this level, right here at our 786, this is where we get a double top. Okay, let me try to remove this line over here. Okay, as you can see, this is where we get a double top. On the hourly chart, it's not as visible, but if we do head down to the 15 minutes, you'd see that this is a very double top. Now, after getting a double top again, this is the first confirmation I was looking for. And another thing I was waiting to see would be a bearish divergence. And again, what do we see at this area? Down there at our other side, you see that other side is sloping down. So after getting the double top and price action headed down, right here at this close, this is where I would have had my entry point. Now as you can see, this is what we call a discount. That's how I like to put it. Instead of buying a price at a more expensive price, now the market offered me a selling opportunity at a more cheaper price. Instead of buying down here, this I have my entry up here. And as you can see, my stop loss would be the same place where I have my 382. Stop loss would have to be exactly the same place we had at 382. And for this area, I mentioned that your first take profit could be back at retest of structure, because now we're getting a more reasonable risk to reward. And if you're looking for extended targets, then you might be shooting for the tutor for the 127. Now this is where I would have my entry point. Keeping in mind that although you were entered at 82, you're still not stopped out yet, because the stop loss would have to be just above this previous high. And this is where I particularly for one would have my entry point. As you can see, I was entered, and for the continuation of that week, you can see that the price action was rolling down, and now price action came close to a take profit but didn't quite hit our take profit. As you can see, didn't quite hit. Let me try to zoom in. You can see that didn't quite hit our take profit, but we close to a take profit. Probably before the end of today, which is Friday, I'm going to close the trade, and if not, maybe I might hit take profit. And as you can see on this trade, this offered me a risk of 45 pips and a total take profit of 109 pips. So this is a 2:4,2 ratio. Now on this trade, one lesson that I think I want everyone to take with them is patience. As you saw that I might have missed my original trade in the 382, but because I had patience and I had discipline on this trade, I was willing to wait for price action to give me a deeper retracement somewhere close to a 382, but where we even got a better price at a 786. Don't have FOMO, which is called a fear of missing out. be patient, stick to your rules, and I promise you that you start seeing results in your trading. So I hope you enjoyed this. Take a break, go and take a walk, and please join me for the part 2 of this video. We'll be taking a look at the Aussie dollar. So yeah. So welcome back, guys. I'd like to thank you for being able to stay with us up to part 2 of our Forex market review. Now just a quick update on the euro dollar. Finally, price action managed to hit our take profit, and finally we ended up hitting extended targets at our 127 extension. I must say, I'm really quite proud of myself where I managed to bank in a profit of 120 plus pips on that single trade. Now someone else who managed to get a bit of the bullish dollar was my partner Manda, where this past Sunday he sent out a review on the Aussie dollar, and he was looking at a possible short-term opportunity. Similar to what we were doing on the euro dollar, we'll first start with a recap just to see what he was planning this past Sunday on the Aussie dollar, and from there we'll have a quick review showing you other opportunities that you could have hopped in on this pay. So see you in a minute.
Okay, if you would potentially enter at this point, you would have to take your profits right here. Mainly I like to measure my profits. I like to take my profits at a 382 retracement and a 618 retracement. So my first targets would come off at this 382 retracement, which would be right here. So if you measure out your risk to reward, stops have to be probably, if you put a 10 pip stop or ATR stop base, that would actually put you somewhere at 45 pips. So this risk to reward, if you enter at that 127 extension, you would have a 1:1 risk to reward for first targets, and second targets, for second targets you would have a 1.7:1 risk to reward, which is not too bad.
Now my partner was specifically looking at these two areas. This is quite similar to what I was looking at on the euro dollar. Now again, how would you know whether to look at the first level or the second level? Because price action could hit our 382 and then plummet immediately from that level, or price action might hit our 382 where someone might enter, get stopped out, and then price action pushes further up to a 1618. How does one actually know whether to focus more on the 382 or the 1618? This is another thing that I don't think I explained vividly on the first part of this review, so I'll try to go through it again on this PS. This is a quite similar situation and what we were looking at on the euro dollar. Now quite similar to what my partner was hesitant about. If ever price action was going to really down, which it could really down for my 382, his major concern similar to mine was that this would widen his risk. So let me make this red, not to confuse you. Let's make this red for danger. Now as you can see, if ever we do get a trade at 382, this is where we were looking at a risk of approximately 112 pips, because our stop loss would have to be just above this recent high. Now a risk of 112 pips wouldn't be ideal for us because our risk management wouldn't allow us to have a stop loss of over 100 pips. So what he specifically said was that, similar to my case, if ever price action would push to a 382, he would consider taking the trade, but primarily he was specifically waiting for a push up to the 1618. And this is, as you can see, if you have an entry somewhere in this area, this would shorten our risk and we could be looking at a risk of approximately way lesser than the first area. This we could be looking at a risk of 30 pips, as he mentioned on this video. Now again, how does one know whether to take the trade at a 382 or the 1618? So for me specifically, for my trading style or my trading plan, I look at two confirmations, which I mentioned to you that First up, I was looking for our double top. This is the first sign to show me an exhaustion of buyers, and the first sign to give me a sign that past action might be ready to reverse. And after getting a double top, I was waiting for a bearish divergence. Now getting either of this confirmation could still be valid for taking the trade, but I for one specifically would prefer getting both confirmations, which would strengthen my case for entry. Now, as you can see, as the week unfolded, price action started to give us a push up to the 382, where we managed to give a little head, and pricing started to give us a really down. Now, if we try to zoom in, you will see that now we're getting a bearish divergence. Look at how our MACD histogram, which is an oscillator, is starting to give us a slope to the downside. But on our RSI, or our price action, pardon me, we're getting equal highs. Now this is the first confirmation that we're getting. So this is the first confirmation that we wait for a bearish divergence. But now I haven't got a double top yet. So at this point, we wouldn't be taking this trade. We would have to be patient and wait to see how the week plans to unfold. Now, a few days later, as this was Monday, Tuesday, on Wednesday, you can see that price action managed to give us a push, which managed to break out of our 382 zone. Now, still, as I mentioned, although we did get a bearish divergence, we didn't get any sign of a double top, so we wouldn't have taken this trade. So at this point, we're still waiting for either confirmation. Let's switch to the 4 hours. So as you can see, on the 4 hours, we got something more interesting, something that wasn't quite visible on the hourly chart. As soon as we got this bearish divergence over here, as you can see, MACD histogram is giving us a slope to the downside, whereas price action is giving us a slope to the upside. And again, another confirmation we got was the double top. Now after getting the double top and after getting a bearish divergence, for me specifically, this is where I will be preparing to take my trade. Now again, this is a decision point. This is what I like to call a decision point. You also have many options to trade that, depending on your style of trading, how you backtested, and is it profitable for you. First thing, as soon as you get up a very double top at this area, let me take my tool. As soon as you get a very double top after getting this reversal candle, one might be looking to put a sell at market order, meaning that as soon as this candle closes, they will press in the button selling immediately. Now another trader would have put a pending order immediately at this area, waiting for a test of structure, and would have put a pending order. Now for me specifically, after getting a valid double top, I'll wait for a next bar market entry. Meaning after getting this reversal candle, which validates my double top, I will waiting to get a bearish candle, and after that close of that bearish candle, this is where I'll be looking to enter the trade. And if you can see the next bar market, as you can see, indeed, this way we did get a bearish candle. Now this is how my trade would have looked like. Although this is keeping in mind that this area, this is the 382. Although we did have two major areas in mind, where at first we could have had a selling opportunity at a 382, of course, and for a deeper discount, we would have been waiting for our 1618. Quite differently to what happened on the euro dollar. On the euro dollar, you remember that price action managed to break above our 382 zone area and managed to push up to a 1618 and a little bit further up to the 1618. If you remember quite well, we managed to hit our 786, got a double top, a bearish divergence, deeper discount, and from that area we managed to sell at a nice expensive price on the euro dollar. Now conversely, what is happening on the Aussie dollar, although we do get those confirmations that we're looking for, which is a bearish divergence and a double top at a 382, this also gives me a valid signal for a selling opportunity. So after this close, this is how my trade would have looked like. As I mentioned, the only major concern about having a trade at this area, while the stop loss would have to be above this previous high. Now there is an, what's the word, exemption, is it? Exemption for exam, is it exemption? No, it's not an exemption. It is, I forgot the word, but in this case, after getting a close from this reversal candle, because now we got a very double top, price action shouldn't give us a push above this previous week. In fact, price action shouldn't give us a close above this highest high. So if this is a very double top, then price action is expected to plummet from this area. Now this would mean that you can have another stop loss opportunity or another area for stop loss just above this previous week, because price action shouldn't give us a close above this previous highs. We could put our stop loss just 5 pips above this reversal candle, and from here we're looking for approximately 5 to 10 pips. And our take profit would have to be, our first take profit, as you remember well, quite well, was at the retest of structure. Okay, let me grab this just to show you. This was the first take profit. Let me widen it, pardon me, let me try to widen it. So first take profit was back at this retest of structure. Yeah, so this was the first take profit, and let me change it and make it green for guap. Green for guap. So this was the first take profit, and extended take profit we had at our 127. Down here this year, this way we would have extended take profit. Now as you can see, this is a quite favorable trade to take, because from this close, after getting entry at this point, stop loss would have gave us 59 pips, a 60 to 59 pips stop loss. For the first take profit, we were looking at a take profit of 164, which at this point we were really looking at a 163 trade. And if you're looking for those extended targets, you will see that we're looking for a total move of 213 pips. So if you manage to get total pips from this trade, this is a quite favorable type of trade. This would have been a swinging trade opportunity, because on some pairs, getting a move of close to 200 pips would take 2 to 3 days at max. So let's just see what happened at the continuation this week. So right at this area, this is where we got triggered. So immediately at the close of this bearish candle, this way we immediately sold at market. So if either price action goes up, then we'll be stopped out, approaching a 1618. But if price action does plummet down, then it will be quite favorable going to hit our take profit. As you can see, immediately this part, one might be quite excited, and price action decides to give us a plummet down right there, this area. This way we hit our first take profit, a total of 160 pips. This is where it depends on your money management skills, that are you breaking even or deciding to take some of your profits. But this was you, we gave you the trade, you decide how you are applying money management on this trade. But preferably I prefer to close this trade, not close this trade, pardon me, to break even, so that even if price action does really up, I'd rather not lose anything. Never turn a winner into a loser. Rather turn a winner into a break even, but never turn a winner to a loser. So at this point, this is where we just set our first take profit. You had the choice to close the trade, because at this point you had 164 pips. Already you shouldn't let greed take in. 164 pips is quite profitable. This is a quite nice trade to take. This is even more from what we got on the euro dollar. So if you got the 140 pips on the euro dollar plus the 160 pips on the Aussie dollar, then you would have had a total of 300 pips. Wow. So this week we had a total of 300 pips. I didn't even notice that. Just saw that now. Damn, we good. I'm just joking. So you had the choice, and if we decided to hold on, you see that from here, this is where market finally closed. market close where price action hit our first take profit. So we don't personally held trades for over the weekend, so my partner will close this trade right here after hitting his first take profit for a total of 164 pips. Now